Well, hello again, everybody, and welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton, and if this is the first time that you're joining me, thank you so very much for doing so. I'm going to try and make it worth your while. And if you are one of the more than, I don't know how many people we still got coming in, 50,000 people who get this email every single week, thank you to all of you for continuing to come back and watch every single week, time in and time out, because it is it's what keeps me going. So appreciate your comments and your thoughts all along the way. We're going to get right to it this week. I'm going to just run through a barrage of pairs right now. Many of you remember from last week I talked about, especially on the yen pairs, how we had a bunch of new impulse legs and those impulse legs showing up here again, even on the pound yen, even on the Aussie dollar chart where we're starting on now. For those of you who are new to this, we look at basically daily charts, 4-hour charts, sometimes hourly charts. I'm trying to give you guys enough time to actually make some decisions on your own. And if I bump down and do 15-minute or 5-minute time frames, man, by the time some of you guys see this video, the trade's already passed. It's already been there and gone. So this gives you a chance to kind of see what I'm thinking about, look through the market through my eyes, so to speak, and really give you some insights into what I'm thinking and what I'm looking to do over the next week or so, the patterns that are setting up. Now we're starting with Aussie dollar on the hourly chart. On the 4-hour chart, excuse me. And if you remember from last week, we talked about those impulse legs. Well, we've even got this impulse leg right here that happened, boom, and now the market has come back down into previous structure resistance, which should now become support. And as you can see there, it has held. It held for the end of the week. And this resistance level was pretty key. I don't know why it keeps telling me I got low memory, but it doesn't matter. So we got resistance, we got support back here. Very good area. The market has now come down into that level. And if I drop this down to a 60-minute time frame, you guys are going to see that the market's just kind of churned sideways here. We tried to spike back up. The market beat it back down. I don't know. There is a trend continuation option here. And the way you would play that is if this market does not, okay, so here's the condition. The market does not gap below 104.79s, then you can buy them. Stops will go below 104.79, and you're going to be looking for a move back up into at least 105.74. So you've got really a pretty nice risk reward here, because if you're just eyeballing this and you're saying, well, all right, and let me just use these lines here. Let's take the low here at 104.80. Let's go 104.65. Okay. And we'll just drop a line in there, and we'll say this is going to be our stop. Now, again, make your own decisions on this, people. I'm not here to give you trade calls here. I'm just here to give you insights and give you some ideas about the best way to play these markets. So if I go ahead and change these colors up, green is where we take our profits, and red is where our stop would be. You're looking at entering somewhere around here. Let's assume the market opens right where we think it's going to. There's your risk, and there's your reward. Pretty nice setup there. That's something that we want to look for, a 2-to-1 risk-reward profile on these trades, and looking for, again, maybe even some continuation to the upside off of that, because we're back out on the 4-hour chart here, and we take a look at this. My 4-hour chart will show up. You're coming off this pretty significant resistance level here. If that holds as support, and we get above this resistance level here, there's a good chance, I'm going to have to go back quite a ways to see, let's go up to a daily chart. Yeah, you could run all the way up to, 107.50s. So there's a really nice area here where if we're playing in between this previous resistance level and the resistance level above it. And there's a nice area here to potentially make some profits. But again, use your own judgment on this. This is just an idea. This is what I consider to be a trend continuation trade. We're playing off of the move. The market has broken structure. We have violated these highs right here. And when we violate these highs, it should be sending us a signal. The market is telling us something. It's telling us that it wants to go higher. And indeed, it did. Once it broke structure to the upside, this candle right here, then we saw it rally. And we rallied another, that's 105s to 105, but another 70 pips basically. And now the market has come back almost at that full measure. It's given back all of that 70 pips. And the question is, do we see any trend continuation out of this? Let's draw a Fibonacci, swing low to swing high. And we see that that previous structure resistance level also comes in at a 382 retracement, giving us added confidence that we may be on the right track here. So just keep an eye out for that. Watch this Aussie dollar trade and see if we can't get a little trend continuation pop out of this into this week. Let's bump on over to the euro. Euro basically showing kind of the same setup here. We have violated the structure level here. We had resistance, 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 then we pop. Market runs up. We came back down in. We tapped that previous resistance level. It shows support, and now we're rallying back. There is not really a trade here that I would look at. What I would be watching for is 132.50s. If I bump out onto a daily chart, because we're on the 4-hour now, if I bump out to this daily chart, what we're going to see is that that's the next structure level. Look at the structure that we've got that exists here. Okay, got a little bit here. We got a 50% retracement. If I scroll back a little bit, you're going to see some more structure in here. So there is some stuff to be paying attention to at this 132.50s level with the 50% retracement coming in. So if we continue higher, you can look for shorting opportunities there. What would I look for? That double top, bearish divergence on the RSI, all those things that we talk about day in and day out. And guys, if that's new to you, if that type of nomenclature is stuff that you're not real familiar with, just stick around for a little bit of time. Spend a couple of months with us watching each week as I run through this, and it's going to make a whole lot more sense. Moving on to the pound. We've been talking for a couple of weeks here. I'm going to go back down to the 4-hour chart. We've been talking for a couple of weeks here about the pound and about this resistance level at around the 382 retracement, about the ABCD pattern that came up into there, and I talked about, looking to get short this market. Well, we've come up into the zone. If this blue zone represents kind of the potential reversal zone, the potential trend continuation zone, we're certainly up into that right now, and the market has pulled down out of it. Now, why do I say that this might be a good shorting situation? Look at the move that we've come out of. A huge downward move here. We've come down from 63.75s all the way to 48s. And then we rallied back up into 53, right up into that 382, and we have structure. Let's go out to the daily chart. And again, I'm recapping for those of you who are new and for those of you who might have been watching but not paying much attention. Again, the resistance level, look at this line, look at the structure that exists along here. We've got structure here, here, here. This is a significant structure level. We even got it back here. And the market has now blasted through that and rallied back up into it and is sitting along that structure level. If you're looking to hop on the trend, if you saw this market fall and you were saying to yourself, oh, woe is me, I couldn't get on the trend. Well, I can't believe I missed that move. This is the trend continuation trader's chance to see it, because we could see a move from 382 retracement all the way back down into 142s. We could see a move that runs from our current position. Let me just draw a line in here. We could see a move from our current position all the way down to 142s. Excuse me, I had to sneeze. So there's a big opportunity here to short this market. Now, one of the things that you're going to want to look for here, if you're doing this, is, man, where do my stops going to have to go if I choose to trade this? And that's going to be the trickiest part of it. You're going to have to wait for this market to give you a sign that it does intend to reverse here. Now, you can just short right up into this area, but then where are the stops going to go? You really don't have a very good place to put stops. Really, the only viable place is back up here above 58.46s. And a lot of you guys are looking at that going, yeah, I don't think so. I like the profit, Jason, but I don't like where my stops have to go. Well, one of the other things that you can do is you can simply look at the structure that exists here. And you can look at, okay, I got support there, a support level there, a support level there, and now the market has found what appears to be a top and is pulling back. Until this structure level is violated, we don't really have a shift in trend. So one of the things that you can do is you can wait for this market to break structure below this support level, And once that happens, once we get a close below that, then you can short the market. Then your stops only have to go here. Then you only have to go above 154.12. And what that gives you is a massive risk-reward opportunity there. But to just nakedly short this market when we come up into this zone is not necessarily the play I would make. Simply because the structure does not exist there in order to find a stop placement. And we can do some stuff like ATR stops and things like that. There are a lot of different ways to play it. My personal preference is for the market to commit to me that it does actually intend to reverse and go in the other direction. And again, it's gonna cost me a little bit in terms of profit, but ultimately what I should have is a much better tradable opportunity, much higher probability trade in the event that that happens. I'm going to leave all of the euro pairs alone because they all look basically the same. You've all got this very, very nice impulse leg that's happened all the way along these pairs. I'm looking over to Aussie yen now. We're seeing the same thing. I'll go to Canada yen. Same thing. And what we're seeing is a pullback off of that. So the question is, will we be able to find any advanced pattern that sets up in here? Any structure, support, or resistance in here? I don't know. We'll have to wait and see. But this gives you, I just ran through Aussie, I ran through Euro, I ran through Pound, I ran, and I can even go back to Canada here, and I can just show you one on Canada. Another trend continuation trade. The market has violated structure to the downside here. And then we pressed back up. Where did we move back up into? I draw the line in. Boom, we're sitting right about that previous structure level. And you can also see back here, the market respected that. And if I come back here and more, I bet I find a little bit more in here if the market comes back enough for me to do it. Let's go to a daily chart and see if I got anything else out of here. Give me 2 seconds here. Yeah, you got a little bit back here, not a lot. Some back in here. The market's definitely watching this 101 handle. It's basically $1.01 is where this market's sitting right now. So there is an opportunity here for trend continuation to the downside, but you are running into, again, if I drop back down to the 4-hour chart, you are running into that support level at around 101. So just be cognizant of that, hey, if you're going to choose to short the market here on trend continuation, that, hey, you've got quite a bit of structure backing up here that could really affect your trade. So that's going to do it for this week. So basically what we're looking at here, guys, is there are some opportunities for some trend continuation trades. We're watching for some stuff on the euro to potentially move up into that 50% retracement. We're watching the pound dollar for a potential trend continuation trade that we've been on here for for several weeks now. And everything else, as soon as we get a few nicer advanced patterns, we may come back to those Gartleys, those ciphers, and take a look at those once the market kind of cleans itself up a little bit. If you remember back, man, we really been crushing it on the advanced patterns, and then when we get large impulse leg moves like in Aussie yen or something like that, that really breaks up that advanced pattern stuff. So now we have to wait for the market to kind of reset itself. We move out of that consolidation back into trend, and now we're going to wait for that consolidation to reappear. So until next time, guys, good luck and good trading. I'll talk to you soon. Later.